Market's still in turmoil, man. It is a wild market out there. The sell-off that we've seen in the indices here recently, it's up there with the speed of sell-off that we saw during COVID. Now, of course, COVID saw this same kind of trajectory, but it continued for much longer. Are we going to see something like that? Or is this starting to bottom out? I'll share my opinions as always. It's not financial advice. I could be dead wrong about whatever I talk about, but I'll do my best here as always to share my educated guess of what I think could be going on. So if we're talking about the S&P 500, the NASDAQ, the Dow Jones, all of them have been seriously beaten down here recently. Specifically, support just can't seem to hold anywhere. I've got my look at all of my levels have turned from green to red, right? So you had the big double top, sold off, and there's been attempts, right? There's been many attempts by buyers to step in and push this market back up, but the uncertainty is just overwhelming, it seems, for this market. And I want to talk about what is happening because it's an interesting way that markets kind of behave, right? Markets trade off of uncertainty and fear of what could happen, not necessarily what is happening today. So if we take a look at the state of the US economy, and I want to show you some cool updates that we just added to the Eco Heatmap on the Edge Finder, you can see we actually added a date column. This allows you to see how recent the data points that we discuss are actually showing. So you can see that in the last 7 days, we've had wage growth, unemployment rate data, jobless claims, we've had ADP, we'd have NFP, right? So we can see that we've had a lot of jobs data coming in. And relative to forecast, that data has mostly come in soft, right? Unemployment rate went up, JOLTS job openings, that wasn't the last 7 days. ADP numbers did come in very light. NFP was just a very, very modest, slight miss number. So you've had a little bit of a miss there. But let's take a look at the actual column and say, are we actually truly seeing a recession number? Well, we recently got services PMIs and it was still 53.5. Manufacturing PMIs at 50.3. GDP numbers 2.3%. I mean, you can fear that a potential, the big R word, right? Recession is the name of the week. It's the word of the week, if you will, on Wall Street. But people are still getting pretty solid wage growth in the United States, below inflation, right? Or I'm sorry, above inflation. Inflation is at 3 for CPI, 3.5 for PPI, and 2.6 for PCE. It's not great, but it's not horrendous either, right? So then you have jobs data coming in soft. So my point here is, are we seeing some softer data than expected? Yes, for sure. But are we seeing a recession warning everywhere? No. Let's be very clear. The US economy right now is not showing, oh yeah, no, we're nosediving into a recession. It's not showing that, right? It's hard to really pull together a whole bunch of evidence to show, look, the US economy is going into a recession. So then why, Nick, is the stock market selling off? Well, because the stock market's selling off because it's worried that maybe those economic data points will sour. They're saying, well, maybe with the tariffs, maybe with this, maybe with that, there's that possibility that we get a recession. And in my opinion, were we due for a sell-off? Yes. But I'm going to go ahead and make the claim. I'm flipping teams. I was bearish. I was cautious. I'm starting to get more and more bullish.
With Pulver Alerts, you get access to the complete log of all of Chris Pulver's trades. But who is Chris Pulver? Chris has over 20 years of trading experience and he's a licensed money manager. He trades all aspects of the market, including Forex, stocks, ETFs and futures, crypto, commodities, and just about everything else. Let's talk more about where you can find these trades. Inside of the A1 Trading Discord, on the left-hand side, you'll find Chris's section. It's broken up into different categories to make it easier to find the trades you're most interested in. Here you can browse his trading journal, where he shares videos and general market analysis, his indice trades, commodity trades, Forex, stock and options, and his futures trades. All trades come with analysis including entries and exits, risk to reward, and more. We're very excited for the future of Pulver Alerts, and we hope you are too.
There's a number of reasons that I can't ignore that tell me I have to start to be constructive here. And I have been constructive. I've already been buying the dip, and I'm looking to continue to buy the dip. But being on the cautious side saved me multiple percent in my account so far this year. But I don't think this is the end of times. I don't think we're going into a recession. And I think that the market's getting it wrong. I think the market's freaking out, and overly so. Look at the VIX. The VIX is at 28. People are scared. We can take a look at the put to call ratio. You guys know I look at this all the time. If you watch my channel, you know I am a put to call fanboy. Put to call is in extreme fear. What else is in extreme fear? The AAII Investor Sentiment Survey. Everybody is terrified. Don't you remember the old Warren Buffett expression, buy when there's blood in the streets? Of course, the market could go lower, and I'm not saying, oh, I know where the bottom is, right? I'm not going to try and call the bottom. And from a trading perspective, from a short-term perspective, this market still looks quite ugly in terms of price action and could go lower. But from a longer-term perspective, some of the stocks that I like personally, I'm going to look to start continuing to buy the dip on the markets. I just want to make that clear because I'm not out here. I know my YouTube thumbnails and titles have been really bombastic here recently, and give me a break. I am a YouTuber too. I trade, but I also am a YouTuber. So I'm trying to get, the most exposure on my videos where I think I'm doing my best to deliver some real value to the audience. So I have to kind of make my titles and thumbnails exciting to help stand out with all the other exciting thumbnails and titles out there. Your viewership is something I want to earn, and I want to keep it by giving you value every day. That is how I've, built my YouTube channel around. Anyways, I just want to be clear. I do think that we have now started the process of getting oversold, and that as this thing drifts lower, I am going to start to add shares in companies that I like. Okay. I just want to make that clear because I have been buying. I'm not saying I'm buying for the first time today. I've been buying before this. I bought some Amazon shares, Uber shares, Tesla shares, Nvidia shares. I've been buying. So I'm not saying I caught the bottom by any means. But if we continue to go lower, stocks are starting to look attractive to me. So that is my opinion on that. I am also, in a short-term basis, on a trading perspective, gold is still very strong. Gold for me, momentum looks excellent, right? So part of the reason I'm long gold, of course, the top setups algorithm giving me this bullish reading. Why is it getting a bullish reading? Well, that uncertainty in the short run, I would argue, should benefit gold, right? Gold is the safe haven that many investors are kind of looking for in these times where they're terrified. I think gold actually has the potential to shoot up to 3,000. I would not be surprised if we see that in the next 1 month. I could be wrong, right? We could completely tank and go the opposite way. But my opinion and my educated guess is I think that we're due to head back to those highs and to break out and go higher for gold. I think there's a lot of uncertainty, and I don't think that that's going away in the short term. Again, in the short term, stocks may look really ugly, and longer term, I might pick up some shares that I like. But from a trading perspective, I'm not looking to take a huge long position on the NASDAQ at these times. But I am willing to take a constructive long position on gold and silver and things that I like, and look for trades that look like this, where I can get a good risk reward, trail stops, and move them into profit. I do a little bit of both, right? I do position trading or long-term trading, and I also do short-term trading, swing trading on the daily chart. So I'm looking for more upside on gold here. I think that we could see it. I also think that yields could continue to come down, which is why I'm long TLT, which has been one of one of my better trades this year, just having parked a good bit of capital sitting in TLT here recently, which has held up much better than stocks. So bonds getting a little bit of a bid. The U.S. stock market opens up in 30 seconds, and man, has it been a roller coaster the last few weeks. You've had just, the market opens up, it tries to move higher, and sellers just rush in. So we'll see if we're going to stay in this kind of selling frenzy mode that we have. I'm about flat on the year personally. So with the NASDAQ down somewhere between 8% here on the year, I'm doing okay. I am looking to buy the dip on some tech stocks that I like. And, we'll see, for better or for worse, right? But yeah, we got stock market opening up here. We'll see, again, the opening bell. If there is some big volume either direction today, could be telling, could be really interesting. Again, like I said, I think that this has become a little bit stretched, right? You've hit some key levels of support, and some big selling has come in when we've broken those levels. Could we see a flush down to 5,400? I mean, we could, right? Frank and I were talking about that yesterday. We were talking about how, you scroll out here and you're looking at the S&P 500. We could even see a push down to like 5,200, where we saw that big August flush, right? So if this market really wants to flush and really, margin call a lot of investors, a lot of funds, a lot of traders, 5,200 could be in play. But yesterday, you had Trump acknowledging that, a recession is not off the table. And that is crazy for a president to kind of go out and say that. So I think that's what the market just freaked out on. That's why you had the 4.5% at one point movement on the day for the NASDAQ. Well, did we have 4.5? I guess we didn't. From the previous day's close, we had about a 4.5% peak to trough sell-off in the NASDAQ yesterday. It's ugly out there, man. A lot of stocks. And I mean, look at some of these stocks out there. Like, look at Robinhood. Robinhood yesterday was down 20%. Coinbase, did you guys see Coinbase? Coinbase was down yesterday 17%. Tesla, my beloved Tesla, absolutely cratered from the high here. You can see down 55%. So again, if you're like me and you're looking at this as a potential buying opportunity long term, it's scary out there in the short run. It is hard to buy stocks when they're cratering. And you shouldn't, whoops, sorry, my phone just, or my, but again, I think that, right now, the point that I would make about this market is that this market is terrified of a possible recession that hasn't materialized anywhere in the data from what I'm seeing, right? We don't see recession woes. Now, again, you might say, well, look, but we're missing expectations. We're surprising to the downside, right? On a lot of these metrics. Yes, that's true. But the actual column doesn't show us in critical. If this was all red, I would hear you. I would say, yeah, we might be on a real problematic spot. But right now, inflation at 3%, 3.5 for PPI, 2.6. I mean, those are not great levels, but PMIs are good. Growth, GDP-wise, still good. There is expectations for GDP growth to slow, and some places are more terrified than others. Like the Atlanta GDP now, I think, has a negative expectancy for GDP growth year over year, or quarter over quarter, which would be really fascinating. But I think the market is getting really terrified on speculating about tariffs. And in my opinion, that could be, I could be wrong, but I think that could be ultimately a pretty good buy the dip longer term perspective.
Interesting factoids coming into today's session. So yesterday, we have one of the largest put option volumes in history, which was interesting. We also have what is this? The fourth largest volume day since 2023. When that happened previously, we actually saw some bottoms. That would have been back in, let me see if I can zoom in. That was the April bottom of 2024, the August bottom of 2024, and now. So the previous one before that was September, October of 2023 when you had a correction. So again, I'm looking at some short-term plays. Short-term plays where I think we have at least the market responding a little bit to a move to the upside. This is a trade I'm trying to close out for a credit. I got a bull put spread, or I'm sorry, a bear put spread here and a bull call spread here. I'm trying to close this out for a max $2. My pending order is about $1.85. I still have another week of expiration, but I'm looking to take about a 100% gain on that position. I only paid like 98 cents. I'm trying to close that out for like $1.85, $1.90. So that's when hopefully going to just settle in and get me filled. We are noticing, I'm noticing some wider bid mid ask prices in the options market, which is not super awesome, but it's just part of the game. We got a couple trades running today, notably on the SPX. Things are relatively calm, not a ton of news today. We had JOLTS job openings this morning. That's about it. Lows from yesterday. I got pretty lucky yesterday on a 3-for-3 trade, where I had a trade in the morning that made some money, trade in the afternoon that made some money, and what is the other trade that I did? Oh yeah, it was a longer duration trade that I closed out for a quick win. So anyway, I'm looking to see if this level today, 55.30, will hold. Hopefully it will. High of the day, that would be about a 100-point move to the downside. That's clearly not safe. Like if the market's gonna sell off and make a fresh low, I've got a broke wing butterfly here today, but I'm hoping that we kind of put in, a low that's maybe market can like test it and maybe rally off of it a little bit. We have CPI data coming out tomorrow. See if the market's going to be at all excited about CPI data tomorrow. Maybe not. Forecast CPI is 2.9 versus previous 3.0 for the year-over-year headline CPI. We took a look at this from the Bloomberg calendar, which is what I'm paying a little bit more attention to this week. If you just go 12th and 13th. So the data for tomorrow morning, year-over-year headline CPI 2.9%, so expected to be a 1/10 increase or 1/10 improvement. And then the core CPI, previous was 3.3, forecasted for 3.2. If the market's going to show a reasonable move, Intel back down to 19. Okay, fine. I got out of this trade for profit. Okay, that's fine. I'm out of Intel. Let this one just hopefully reset. This could be a good opportunity in the medium to long term. We had a nice little rally here. I do have a pending order. I might just put this back around like $15 on Intel. So if we settle into these levels, anything below like $17, $15, I think this is a pretty good buy opportunity on Intel. So keep a close eye on that one. Let me set a chart alarm at 16. All right, watching a couple trades on SPX today. See if that will just, more time is needed. I'm down about 20 cents on the trade right now. All right, so blood in the street yesterday. I mean, it was bloodbath city. This is the heat map from yesterday's close. Almost 80% of stocks declining. It was a pretty painful day, and you can certainly feel it. It was interesting to see Berkshire Hathaway had a green day, JP Morgan, Morgan Stanley, Goldman Sachs. There's a few sprinkled in, obviously, like, you got 7,000 stocks. They're not all going to be red, but 80% were red. And the S&P was down. This actually was an earnings multiple, so it was a pretty ugly day yesterday. But some of the big levels that I've been talking about the last few weeks, I still am somewhat optimistic that this market is going to find a low sooner than later. And so that low is hopefully anytime. April, August, this area, maybe CPI data tomorrow is enough to get this market excited about something. I'm a little skeptical of the rally to the upside as far as how high we go. I don't know if we get all the way to all-time highs. In fact, I think we don't. But I think even a little relief rally where this may come down and poke and maybe get right at that 10% level. I'm really curious how this plays out, like to the percent. If we go high to low, we're right around 9.4% on the SPY or S&P. So do we push a little bit lower? I mean, what's another 0.6%? If we get exactly to around 10%, that puts us around this 55-30 area, 55-20 area. I said that 57 to 5,500 is my window to be buying for the next couple of weeks for some short-term gains. So I'm looking for a bounce in the near term. What I'm going to also look for is on a shorter time frame. If I put in a couple of moving averages, if we start to get some up days in the near future, then I'm probably just going to look at doing some bull put spreads below some automated trend lines and just trying to grab some short-term income. You know, one thing I'm gonna attempt to do is trade through this in the near term as well as be positioned for the medium to long term. My plan, and I talked about this a little bit yesterday, would be if we get a rally to the upside, I will be de-risking. Okay, so a de-risk. What that means to me is any trades that I am not enjoying, any trades that have been upside down and causing me a little bit more pain than what I'm wanting to see, that I'll be getting rid of those trades at small wins, break evens, and small losses. All right, so I'm going to limit some of my exposure just because here I still think there's a lot of uncertainty. So if we come back up and we kind of balance out this fall, we kind of balance it out, I don't know if we're going higher or lower. And so rather than taking on, you know, more risk and still getting flushed out to a fresh low, if that is the case, I don't want to have heavy amounts of risk going into like a second wave lower. That makes sense? So if we see a short-term rally, we're looking to de-risk. That might entail taking some losses, probably washing some good with some bad, but getting rid of some of the exposure and kind of making my portfolio a little bit more market neutral. All right. But I'm looking for that to come, you know, relatively soon. We just crossed through the 200 moving averages, some pretty good technical support. We've had some capitulation type feels, like yesterday. It felt like capitulation a little bit since it just, you know, opened lower and slid lower all day. XSP, same type of thing. That's why I put in here this 585 to 600 window is kind of a risk relief rally. S&P, SPY, same thing. Watching to see what this percentage looks like. So high on the SPY, down about 9.4%. If it drips down to like that 10% level and then pulls back, that would be fine. RSP's equal weight, we're actually back down to the lows from early in the year. Interesting. I do have a symmetry measurement. I might end up picking up some more RSP. Discount wise, if we come to some fresh lows, that would be a 10+% discount on RSP. Let me see, check this. So 2022, or even this pullback in 2023, this pullback was around 24%. Okay, that was that bear market? No, that was 2020. Yeah, that's okay. So bear market 2022, about 23, 20. I mean, it's about the same. So I don't see it necessarily outperforming. But if we're at a 10% discount, it's not a bad spot. So anyway, I've got some positions in RSP. I think equal weight could perform as well, maybe even a little bit better than SPY this year, just because you're taking out the concentration with Mag 7. What would you want to see right now for US dollar strength? I don't want to see any dollar strength. I don't think we're going to have any dollar strength. I mean, technically speaking, would you call dollar strength in this area? This is such a random spot to be like, is this thing going to turn? I don't see that at all. I mean, if I'm seeing dollar strength, I want to see this dollar down here. And I don't know if I'm going to get that trade. You know, I don't know if this, I mean, this is a very inefficient decline in the dollar. And the euro has really been the best currency to trade against the dollar. It's just been straight up once we had that surge above 106. But this is such a random spot to say, I want to see dollar strength. I don't think we're going to get it. So I wouldn't mind seeing the dollar settle back into these levels and then see if this area offers up some support. So, I mean, what a ridiculous move, by the way. I mean, coming up here to, 110, I thought we had some pretty good structure here to say, all right, well, I guess the pain trade would be this rips up, we pull back in base, and then we have more dollar strength. And that, brings about some really difficult situations where the dollar is so much stronger. But man, we're seeing super weak dollar. So I'd say let it do its thing. If this is going to pull back and sell, there's maybe some support around this 101 to 100 handle. But I straight up missed it. I mean, this trade for me was, I was looking for support and a trend line break. I didn't get it, so I didn't force any trades in the dollar. And it's fine. New Zealand dollar, still back to break even. Aussie dollar, I closed out for profit. Dollar Swiss continues to drop, which I'm okay with. I might load back under the dollar Swiss positions here. So we come to like 86 down to 8,400. I'm going to be looking to sprinkle in some more dollar Swiss longs and try to range trade this thing. If we go dollar yen, I mean, I don't want to trade dollar yen short because I don't want to hold the negative swap. But this does look like after breaking this low, I mean, this could be setting up a topping pattern. So I'm trading this still through either Japanese yen futures or FXY, just holding shares long. Currency strength. Yesterday was Japanese yen rising to the top. Come on, browser. So yesterday we had Japanese yen rising to the top. Today we have euro on top. Japanese yen weak now, going back to baseline. Canada is getting weaker. So euro still getting a little nudge from the weaker dollar.
Yeah. So one thing I would look at, I'm no longer looking. So now that this has changed, right? You know, my previous bias on the market was, and this is basically where the majority of my income was coming from for like the last 4 months, it was shorting the euro and then buying dollar crosses like dollar Swiss, dollar CAD. That was the trend for a while, and that's how I was doing it. And so now that has clearly shifted, and it seems like the fundamentals have shifted in more in favor for the euro. So when you're getting levels like these, right, you could see a pullback because now I am more bullish longer term or mid-term. I'm not going to short pullbacks. Instead, I'm going to let the pullbacks happen and then buy on those pullbacks. That way I'm going still with the trend. You know, the COT and everything was in favor of this. So, you know, if you go down into the lower time frames like the 4 hour or the 1 hour here, for all of these markets, really, you get these brief pullbacks and then it keeps, you know, chugging higher. I would say that as well for the S&P and the indices. If we kind of just look at it, every single time by noon, any bullish momentum gets faded back down. You see here by 2 p.m., this thing has faded. Over here by 1 p.m., it starts to fade down. And you can see that that's the case right now. So it's really tricky because in the morning you will see, you know, a candle that looks like, oh, look, it looks like a hammer candle or something. And it could be a reversal. That's when you have to be careful because those moves get faded really quickly. If it comes, you know, in line with expectations, then, you know, I don't see nothing happening. But I understand that most of you guys here are like very short-term traders. So, you know, on the 5 minute or the 1 minute or whatever, it may seem like something is crashing or not. But that's when a lot of the noise happens. You know, when these figures happen and they come in line with expectations and nothing, you know, really happens. But if there's a big miss or a big surprise, then that's when people start repositioning. And that's why you see these erratic movements right off of a news release. But we'll see what happens. We have 9 seconds to go. What are my expectations? I mean, I would think, let's see. $7.7, it beat. Nothing really happening though. I don't see any big wicks. You know, I would maybe if we're on a very small time frame, I could see some chop, but yeah, it was a good surprise, but we'll see how long it lasts, right? Because we need to see if the market is going to really digest that in a good way or if it's going to ignore it, right? Like I remember what was it, the last CPI report, guys, it was a tick up in inflation, but the dollar declined right after that. So the market decided not to really take that into consideration. And there's times where, you know, certain markets, no matter what the news release is going to be, it's just going to ignore it and it's waiting for something else. Jack, I look at a few pairs, mostly the majors. I've been in the Swiss yen position, which is something that's a little bit not that I usually do. But as far as like equity indices and the commodity side of things, I don't trade those. So my broker is a Wanda, and that's where all of my capital is allocated at. And so I can't trade those products. But Jack, to kind of go further into that, I'm pretty flat. Like I'm not really actively looking to add trades. A lot of it is because I'm going to be pretty busy. I have family coming over, which is, I'm going to say, is a blessing in disguise because, this market is a little erratic right now. So I'm just going to use that time to, I'm still going to monitor. I'm still going to keep up with what's going on. Like I know we have CPI, I think tomorrow, if I'm not mistaken. Yeah, we have CPI tomorrow. I'm still going to monitor those things, but I'm not going to be actively looking to be involved in the markets just because I know how it can get. From my experience, I'll give you guys a story about, the last August sell-off that we had. I got burnt pretty badly on that one. Initially, because I remember, dollar yen was approaching, I believe it was the 160 levels. And we were, there was talks about interventions and things like that. And so that caused a bit of a sell-off. And then we had like a brief pullback, or it looked like a pullback. And then it continued to decline further. So whenever, we got that pullback and I thought that was, the bottom of it, I went ahead and bought there, and I got burnt pretty quickly. So I lost a good chunk of money there. And so I'm being cautious. I'm trying to, prevent that again. And that event, from the beginning to end, if we're referencing the S&P, that was a 21-day move here. So we kind of look at what we're at here. We are at 20 days. So actually, maybe we could see a bit of a stop there. But when I reference the VIX, it doesn't seem like anything's going to stop, like today or tomorrow.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.